In 2026, trading should not be complicated, right? So I'm going to be going over an ES short trade that I took on Friday the 9th. And what I'm going to be going over is the power of choosing one key level, waiting for buyers and sellers to give you confirmation in that key level, and then trading based off absorption and order flow. So most traders don't lose because they have bad psychology or they don't know how to trade, right? Most of the losses that you face come down to not having a framework, right? So the framework that I use in my trading is the simple 3-step model, right? So you need to know where to trade from, what to look for, and why you are looking for it. And so Friday's shorts, there were short-lived shorts that came down from here. So this is ES futures on the 15-minute time frame. So from around 69.85 to about 62, this is where the shorts happened. Now it's important to understand 3 things, right? Where the trade came from. So this is your key level. So we're going to be going through why this was a key level from Wednesday. We're going to be looking at the buyers and the sellers, so the bid and the ask, right? So understanding the footprint charts, and we're going to be understanding absorption, right? So that's kind of the plan for this video. So we're going to start off by looking at Wednesday's key level, right? So what made the key level valid? So this was sort of the key level on Wednesday that we're looking at. So if I were to dive price in here, what you're looking for here is very simple. First, you're looking for a 15-minute fair value gap. Now, I get a lot of questions about this, and I want to just break it down so that traders can understand. This is my fair value gap here. This small section is the fair value gap. Now, I choose the candle before the fair value gap. That is my key level in the market. I'm only looking to trade and see the order flow inside of this area. Okay, so this is where the ATAS platform comes into play. So this is the order flow ATAS platform, and I'm just going to go all the way back to that day, right? So this was now Wednesday, the 7th of December, right? So January, 7th of January. Now what we're looking at here is we're looking at this break below the level and this retest area, right? So this is the break all the way down. Now what made Wednesday's level a key level? So if you're trading ES, a very critical level for January is 69.84 to 89. So the main story behind choosing key levels is like this, right? You're looking for a fair value gap. That is step number 1, right? You're looking for an FVG, you're looking for some kind of absorption, and the last thing you're looking for is you're looking for POC or volume. These are the 3 sort of main things that every trader needs to know when they're finding their key level. So step 1, we have a fair value gap, right? So that's ticked off. Step 2, we're looking now at absorption, right? So when we go to the ATAS platform, what we're seeing over here is we're seeing price breaking below our level. So we have here a classic break and retest, right? So if I just continue to play price on, what we saw here was this price action here. So on the 5-minute, we saw this, right? We're seeing this, okay? So we see price giving us a break, a retest, and then we continue lower. So in order to validate our key level, we need an absorption. So we want to see what was going on in this region. Now, in order for us to understand absorption, you have to use the footprint charts. Now, on the footprint charts here, what we can see is a big red candle. So we see a lot of aggressive selling over here, breaking below the zone. Now, when we retest, we actually see the opposite, right? So we're only interested in the order flow inside of our key levels, right? And so if I were to bring this over to the right hand side, we have the footprint charts on the left and we have the candlestick charts on the right. Now this retest over here, this break and retest, you're very much interested in the retest, right? This is what we're looking for. Now inside of the retest, what we see here is buyers. Now specifically we see buyers, or we see positive delta, right? Positive delta. Now, what does that mean? What does that positive delta represent? So when you're looking for key levels, step 1 is you're looking for a fair value gap, 15-minute fair value gap. Step 2 is you want to see the interaction between buyers and sellers inside the zone. That is the story that you're following, right? So step 1, fair value gap. Step 2, we have absorption, right? Now, what do I mean by absorption? Absorption is when we see, in this case, we see a lot of buy orders, but no reward, right? Because these buy orders, if they were successful, they would have broken above the level. But we broke below the level, which means that all these buyers failed, right? So that is what we mean by absorption. So in 2026, simplify your trading to fair value gaps and absorption with volume. That's all you need, okay? So we have a break below, we retest. Now, just to go over a few numbers over here, 81 for 403. So that's a big difference, about a 300, delta here is 300. It's the right number minus the left number. So we see a big blue delta here, which means there are more buy orders, right? Positive delta refers to buying effort. There is a lot of buying effort, but no reward. Because if these buyers were successful, we would have broken above this level. So in this level here, 69.89 to 69.84.85, there is a lot of buyers, but no reward. So what that means is, from a price action perspective, is we see a lot of buyers, but no reward, right? So we see no reward. Now this here is absorption, right? This is what we mean by absorption. So we have a fair value gap, we have absorption. Now the last thing is volume. So once we've understood this, we want to just have a basic understanding of volume. So I use the volume profile, or POC. Now, this is really simple to use, right? The POC isn't complicated to use, right? So this is the market profile. Now, I've made previous videos about market profile and how you want to be using it, but it's really not that difficult, right? So when we just continue to play price on, there's where we see. So this was now Wednesday the 7th, and this diagram here shows us the volume profile. So we have the gray regions, we have the gray regions, right? Now this region here, the blue region, is where the highest amount of volume was being traded. So this is a POC area. So this yellow line over here, this is the POC. Now what does POC mean, right? POC means point of control. Now point of control means highest volume, right? And this is kind of the finishing story point when it comes to choosing key levels, because the most asked question I get is, how do I find my key levels? And so we've been through the entire checklist. So yes, we have a fair value gap. That is kind of the first thing you're looking for. You want to project the key level, the candle before the fair value gap, just like this, right? The second thing you're looking for is absorption, right? So typically when you see a break to the downside or a break to the upside, you want to see absorption. I'm just going to write ABS. And these are the three things that validate any key level in the market, right? These are the three things you need. You need to have a fair value gap, you need to have absorption, and you need to have some kind of high volume area. The reason high volume is important is because volume corresponds to interest. So what that means is, right, if you take a basic definition of volume, is the bid plus the ask, right? So bid and ask you can only see via the footprint charts. So these numbers here, the left number is the bid, the right number is the ask. So what that means is, when you see a high volume, it means the bid and the ask together are very high, right? There are a lot of market orders resting in this level, right? So if I bring this over here, there are most of the day's market orders were resting in this key level. Now that is a good sign, right? Because high volume corresponds to high interest. And high interest is where you want to be trading from. So high volume corresponds to high interest, right? Interest meaning buyers and sellers are interested in trading at that price. They like that price. They think that is a fair price in the market, right? So anyone who's stuck on key levels, this is my basic framework to finding them, right? Fair value gap, absorption, and volume. I often say to traders, you can avoid 90% of your losses if you simply waited for the markets to trade at your key levels. And so I used to be a trader where I would try to force and catch moves in between levels, right? So if this is your key level 1 and this is your key level 2, I know it sounds obvious, but you only want to be taking positions inside of the levels, right? Key level 1, key level 2. Anything outside of these levels is a no zone. Right? So if you're struggling with FOMO or any psychological error, it's not because you have bad psychology. It's because you either don't know how to find key levels or you don't know which key level to wait for. Both of them are bad, but the good news is you can solve both of them. So these are the two current levels that I have on ES, and I'm going to be going over Friday's short off this level, right? So Friday's short, we had pretty choppy price action, but this was the level I shorted from, right? So the level that we've just been through from Wednesday held on Friday. So this was key level 1 and this was key level 2. Now, again, why was this a key level, right? So this was now 69, 63 to 54. So when we go to the ATAS platform over here, again, just bringing that up. If we take a look at the order flow in detail, right, and we go to a 15-minute chart, this was a level that I had, right, all the way from December. So this was super choppy price action. Usually it's like that to start the year. But when we look at the price action at this area, so this is now 69.55 to about 60 area. What we can see here is lots of negative delta. Even over here, lots of negative delta, but we were unable to sustain lower prices. Even over here, negative delta, right? So when we see the market giving us a lot of this negative delta, it simply means there are selling orders present, but selling orders were not rewarded, right? These sellers were essentially absorbed around 69.60 area. So if we go to a 15-minute chart, what we're seeing is this entire region was full of aggressive sellers, right? This entire region here. We see lots of negative delta and no reward. This is absorption, right? This is absorption. So what we had is we came off a fair value gap. We had a 15-minute fair value gap all the way from November. It was quite a long lasting level. So on the 5th of December, we had this FVG. Now, when we go to the more recent price action, we had a fair value gap and we're seeing the absorption inside of the candles, right? We're seeing the absorption, sorry, inside the level. So we have a fair value gap, we have absorption, I'm just going to write ABS, and the last thing is we have a POC, we have point of control, right? We have areas of high volume. Now, what does that mean, areas of high volume? So we're looking for that POC. Now, specifically here, this was our POC area. So this was now price action for Thursday. Most of the volume situated here. So if you look at Friday, I took a short from 1 and we came down to 2. So it's not a coincidence the market was most reactive to these areas. Now, the reason I say that is because price will gravitate towards these POC areas, right? POC is a fancy word of saying where is the most amount of volume, right? Where is that point of control? Where is the orders highest between buyers and sellers? Now, just taking a look at this, my short position on Friday I'm going to go through was in this level, so key level 1. Right, where this POC was, and I got out at this key level over here where the second POC was. Now that is what you want to be doing, right? You want to be trading from key levels, and you want to understand where the volume is highest. So now I'm going to be breaking down this trade over here, right? So this was a trade that I took. So I actually took 2 trades. One was a break even, and then the second one was a win. And I'm going to be breaking down exactly how those trades panned out. So if we just break this down, we had over here, right? So 2 trades, right? First one was break even and second one was a win. So I'm going to be breaking both of those down in terms of the order flow. So order flow is the biggest hack to your trading in 2026, right? So order flow is as simple as this. Identify your key level, wait for buyers and sellers to give you confirmation in the key level, and understand how absorption works, right? That's all you have to do. So we've identified step 1. So we've come into our key level, Wednesday's key level. So if I just break that down, we've come into Wednesday's key level. That's step number 1. Boom. Now, step number 2, once we come into that level, is you want to focus on order flow in this region. So I'm going to be breaking down candle by candle how to find these rejections. Okay, so we want to be kind of diving into this region. Now, when we come into a key level like this is the only time I focus on footprint charts. I'm not interested in reading every candle on a 1-minute chart or a 5-minute chart. I'm only interested in the few candles inside the level before we have a rejection. Now, for me, this was a rejection over here. We had these big red candles or bearish candle to the downside. I'm interested in this area. Now, what makes me interested in this area is a simple fact. We have an absorption. Right, I want to know what the orders were doing inside of this region. So this was the first screenshot I took from the ATAS platform, right? So let's get them side by side. Now, when we look here specifically, right, what we're seeing over here is this, right? We're seeing this yellow box. So this is the order flow inside of the region. Now, specifically here, we have a green candle, which represents this long wick. Now, inside this green candle, we see a 0 for 9 up top. Now, that's a finished auction. A finished auction shows us that buyers and sellers are no longer interested in trading at that price. It is an area where the auction was wiped out, or a finished auction. 0 prints are what you want. Now, if we look at some of the other candles that we had, namely 1, 2, 3, before the melt-off started, what we can see here is delta. Now, the only thing you're interested in with footprint charts is reading the delta inside of the key levels, right? So this is all you're interested in. You have a key level. This is the story of the trade. Once you have a key level, you want to focus on delta, right? And delta gives you the entire story of what's going on. Now, in this case, we have a positive delta, right? Positive delta or blue delta. Now, if you have a negative delta, it just comes up as red. But when you have a positive delta, it comes up as blue. Now, what that basically means is there is more aggressive buyers than aggressive sellers. So in other words, the buyers are putting in lots of effort, but they are not being rewarded. Now, the reason I say they're not being rewarded is we have our key level again over here, right? So if we were to break above the key level, then they would be rewarded, right? Let me just draw that again. So if the aggressive buyers were rewarded, we would have seen sustained higher prices, right? But we don't see this. We actually see the opposite. So we see a lot of buyers in this region and we see downside follow through. So what's really happening here is buyers are being absorbed, right? This is an absorption. So key level, delta, and what we're looking for is absorption, right? Absorption is a fancy way of saying all these all these aggressive buyers, there are passive sell orders sitting over here in this region. So this is a massive supply, right? This region here at that time, 69.84 to 89.90, this is a massive supply. It's a massive supply because buyers were not able to see follow through. Buyers were trapped, which means that sellers are in control. So that was the first rejection, and this ultimately led to the first trade. Now, one question I get is, which candle do I enter from? Now, the truth is, you don't necessarily need a candle to enter from. You just need to understand that if this is your key level, right, and this is your key level here, key level 1, key level 2, once the market shows you its hand in the key level, you can confidently short anywhere down to this key level. So here was my first kind of entry over here. This was my first entry, which I closed at break even. Right, so I had my stop loss above here, and I wanted to target this level down here, right? Nice and simple. Now, I wasn't a fan of this price action. I closed the trade at around 10 a.m. because of the news event, right? Even though it would have played out, I closed the trade at break even. But I entered again. Now, for me, I will not enter a trade. I don't like entering trades between levels. So if this is my key level, if this is a key level and this is a key level, I will never enter in between, right? I want to see a rejection at one of these areas. Now, in this case, we actually did have the rejection at 10.04, right? So we came into the zone at 10.04, just over here, and my second short came just after that, right? So here was my second short position here. So I got in short at 69.74. So at 69.74, what did I see? So this is around 69.75, 74. So a little bit late. I wasn't too impressed with my entry, to be fair, but I managed to get in. And I was simply targeting the next key level down here for about a 1-to-1 or just over a 1-to-1. So if we just take a look at the 15-minute chart, I use fair value gaps, but only to target, right? I use fair value gaps to target. So this was the FVG. This was the zone which I thought price was going to fill, and it did, right? That was the target. That was my target for that day. Now, again, why is this a good target? So yes, it's a key level. Yes, there's a fair value gap, and also there's a POC area. Remember what I said about POC? The market likes these POC areas, right? So you want to be trading from one POC area to the next, wherever there's high volume, right? So that was the trade, right? That was the position itself. Now, quickly going over this execution, what made me re-enter, right? Why did I re-enter? So I exited here out of fear because there was a news event at 10 a.m. So this was the 10 a.m. candle. This was the confirmation. So let's break down what was going on. Now, specifically, the confirmation was here, right? That is the confirmation right there. Okay, so let's break this down. Now, if we just take a look at this candle here, what you can see here is, again, this candle here, 10.03, then I entered at 10.04. Now, when we come into the key level, just like previously, we had a lot of aggressive buyers, just like over here, a lot of aggressive buyers. Same over here, these aggressive buyers were rejected. So this here means that we're at a supply zone, right? This is a supply zone, right? The reason it's a supply zone is because sellers are in control. So the way that I remember this, the story you want to kind of play in your head, this is the story of the trade. Once you come into a key level, that's the first thing. You want to look at buyers and sellers, right? You want to look at buyers and sellers. Now, specifically here, there are more aggressive buyers and sellers. So there are more buy orders than sell orders. Now, is there follow through of buyers, right? If there's more buy orders, right, as you can see here by the delta, if there's more buy orders, did we break above the level or below the level? So we've struggled on 2 separate occasions to break above the level. So what's going on now is we have a key level, there's more buy orders than sell orders, and there's no follow through, right? There's a lack of, just going to write here, buyer follow through, right? lack of buyer follow through. And so what that means is who is in control of the price. What it means is there are passive sellers in control of the price. And so this is the entire story that you want to basically play in your mind. This is the story I play in my mind. So, okay, we tag into a key level, there's more buy orders and sell orders. We can see that via the delta, lack of follow through, we break below the level, which means that passive sellers are in control. I want to be selling, right? This is the story you want to play in your mind, right? And this is basically how you want to approach every single day, every single key level, right? Wait for a key level, look for buyers and sellers, and then trade the absorption.